Welcome to Trading Lounge and the US indices for Wednesday, November the 2nd, and starting with the S&P on the daily chart. In a nutshell, we're looking for a move up here to the 61.8%, which will be at the 4,000 area. We can see that the market has been struggling a little bit lately. We haven't really breached any previous lows in the market yet to give overlapping wave structures to really confirm that the move up is corrective and is finished at this point. Obviously, we've seen I don't track all stocks, but some of the big stocks that we do track, Alphabet is one of the weakest. Microsoft is not too far behind. Amazon's not too far behind. So as we sort of expected as the move was coming up here, we figured that the earnings season would be the culprit for, well, one of the culprits. There's lots of things going on, of course, that would, pull the market down, and was sort of seeing that domino effect. But at the same time, we're seeing some strong markets. We're seeing the banks push higher, healthcare and some of the other markets. So there's a bit of a mixed bag in there, but there is that sort of tussle going on in the market to see where that sort of weight of things go, and the S&P is a bit of a moving average for all of that, and the NASDAQ is actually weaker than the S&P, but we knew that anyway in the whole move coming down. We understood that. So let's go in and have a look at this move to the upside. One of the things that I also mentioned is that that the number here 38, once that becomes the resistance, then that's probably a good indication that the market will be coming down, because normally group 2 here, well, we can look at this in a couple of different ways. We're working with the number 4,000, which I call a medium level regarding the trading levels, and then we have group 1 above and group 2 below. So anything that we do within this space here, I never really see as part of the trend. I mean, everything is connected as such, but when the top here becomes the support, then we would go long from that point. When this becomes the resistance down here, then we will look to go short at that point. So we've had a few spikes and mishaps down here. It held quite nicely here. We'd always look for the first low below the level and then short. We had that spike here. So it was a bit of a dodgy situation in there, but it has held up, and we were counting down for that, and that's fine. So, but the next time this group here becomes the resistance, then we'll be coming down, because as I mentioned when we were down here before, what we were looking for was a retest of supply, or the closest largest number, and it could be anywhere in this space here, but the 61.8% was here, and we're probably at the 50%, and yet we could push up to the 4,100 at this stage as well. There is a case at the moment for a top being in place right here for that. We'll look at that. We'll look at every high, as we looked at the previous high over here, I think it was, or this one, whatever, I can't remember. We'll have to look on the intraday to jog my grey cells, but everything's going pretty much according to plan. There are times when we don't know what's going on, and yeah, generally speaking, we've sort of got it. Now, as I mentioned before, we could count this up here as a positive wave 1 up here and a pullback for wave 2, and then going up for wave 3. We could do that. And we could look at that today as well. We could have that as a leading triangle, diagonal triangle going to the upside. But at the end of the day, I wouldn't basically turn totally bullish, not why the big tech stocks are falling out of bed, but we would need a decent pattern to go to the upside. So even if we had this as a leading diagonal here, for example, and we pull back 50-60%, and then we had another move up through to here, well, that would only be 3 waves to the upside. So I wouldn't be bullish at that point. Now, some stocks could be taking out their previous highs from over here based on 3 waves to the upside. Right, there are things in the healthcare sector and maybe Johnson and Johnson and those sorts of things. But I would need to see a nice clear 5-wave structure. So 1, 2, 3, 4, 5 here for that. And then pulling back. It doesn't mean that we don't go long until that point. We can dance all night, you know, but, you know, we would need significant, because of the downtrend, you know, this is a pretty big trend down. And yes, this can be a low here. We can look at this, as I've mentioned before, we could look at this as an A and a B and a C wave down here. But this whole trend here just sort of reminds me of, you know, when a trend is moving either up or down, you can kind of get a sense if it's expanding or contracting, you know. And I see this market here expanding to the downside. Quite simply, you could see the length of this trend compared to the length of this trend. You could look at this major rally here compared to this one. So really, in a way, it's basically, you know, this thing here is opening up, is expanding to the downside. It's not contracting. So that's just some little things that I look for in markets, and we don't always get them right, but you know, as I mentioned coming up here as well, there's, you know, everybody will turn bullish coming up here, and people will be saying buy at the bottom and this is it, and all sorts of things going on, and shit, they could be right, you know. Some folks are right sometimes and some not, but we just, for us, we need some solid evidence for that, you know, and we need that, you know, we need to bring the currencies into it and get a better sense of everything. So anyway, enough rambling. Let's go in and check on this, and we'll check on this trend. We'll have a look at it as bullish. We'll have a look at it as bearish. We'll have a look at it as the top being in place. We'll have a look at a top going further up. We'll try to get a balanced view of the whole situation. But before we leave here, I just want you to understand Group 2 here, 36,050. And 72. So when each one of these becomes the resistance, we need to be adding little positions under them. And once this one here becomes the resistance, then we drop down to the 5 at that point, and then we'll get some sort of correction here. And if that becomes the resistance, then we drop down to 3 at that point. So it's just a step-by-step process in all of that. But Group 1 above, Group 2 below, we kind of need that as the resistance. And I've always said that 3,800 would need to be the resistance before we you know, moved on to the downside, so to speak. I mean, just as an outside sort of thing on the intraday now. So we'll start at the 50k tick, and I think I've got this counted differently, or no, I'm thinking of Apple actually, sorry, but yeah, so from this low here, looking at the A wave, the B wave, 1, 2, 3, 4, and we can put wave 5 in here now and put that on the top there. All right, so that's something that we can do at this point. We're very close to our 50% retracement level area at being at that point there. 50%. So you'd expect the market to struggle at the 50% anyway. It's just normal for it to do that, and that brings us in at 3.9, and we can see we've got history here of all of that. So, you know, it's good not to make decision when you know that there's going to be resistance there. Well, you know it's going to be sold off. But is that the turn in the market? Is that the turn to the downside? Well, you'd want to be sure about that before you hit it with full trade, so to speak. One of the other things here too is that this wave 2 here has is really quite big compared to wave 1 here. In a lot of cases in stocks, we've actually put this here as the B wave and having the A wave sitting here for this. So that's something that we could do here, and that would actually be a better look and feel about in terms of perspective, in terms of using the Elliott in that case. So we've got the 38 here, so we've got 5. You know, we just use the Fibonacci numbers as a price ratio, because we know that retracement levels and extensions work reasonably well. Using Elliott, using Fibonacci as a time indicator doesn't work very well. It's a bit of a hit and miss affair. But in terms of price up and down, the ratio works quite well. So we use it as a price. So 1, 2, 3, 5, and 8, and we break it down further than that as well. And but yeah, so what we want to see is that I'm thinking that we can just have a ABC correction here and then have another push up. That's what I'm kind of thinking. So in terms of going short, we could be short right now and do all those sorts of things, but we'll have a look at that on the, when we get closer to it. But when we come down to the 38, we can see that it's had history here. So it's going to have a bounce here, isn't it? If that bounce comes through and gives us the first low below the level, well, then that would be one of the safe trades to the downside. And then we can look, when we talk about number 8, we talk about group 2. So group 2 is, the lower end is 36.50 and then 37.20. You might also just want to use 3700, but I just like my trading levels idea. So you can see that it's got, it's got a bit of gravity, that particular number. I won't go into all of that, but so what we basically try to do is get a very small position there and then get a very small position under this one, and then we can put a larger position under this one here, and then we leave it, and then we look to add under here. We can get, when it comes down to the number 5 being the second strongest number after 1, there will be a bounce there. If that bounce, you could also short that bounce there as well, but we'll get into all of that as things unfold. We don't need to go there now, but we need to start, if that is a top, we need to be all over it. We need to start talking about this move to the downside a little bit, so yeah, that 38 is a bit of a line in the sand. Okay, so if that becomes the resistance, then you need to be on the short side. So you need to come down, go back up and test it and take that low out, or the second low at that point. So let's cruise on. Let's go and have a look at the more bullish count in the market. So let's, I think I've put it here. So this would be a leading diagonal move here, and in this case here, this is one of the risks here, that we could get 5 waves down here, 3 waves here, and then another 5 here, and then move up at that point. So yeah, I mean, that comes in around, this low here comes in at 36.50. So this is the lower end of group 2 here, 36.50. If I can get it there somewhere. So you can see, it's an important little number, isn't it? It's very subtle, but that's the lower end of group 2. So this is the resistance here. So we would look to go short, below here on that, once that establishes itself, and then we'll go up to the second high, that sort of thing here, over here for that. So, but anyway, that's that. But that's the bullish count. So that could be wave 1 and 2 here, or an A wave and a B wave here. But I don't have any evidence of that as such. We can look at the big move down quite simply as the A wave, the B wave, and the C wave for wave 4, and be done with it at that point. So it's possible. So I need to see that in the stock market, you know what I mean? And I'm not seeing it with the big tech stocks at this point. The big tech stocks are the weakest, so they'll probably be the last to recover. So it'll be the, in most normal sort of bear markets, it's normally the banks that lead us out of bear markets, because they've got the money, haven't they? That wasn't the case in COVID though, but just generally speaking, let's go and continue to look at as a corrective rally in all of this. So on the, I think on the 10 we can do that. So yeah, this was when we spoke yesterday, we were looking for one more high to come into play here. So we've got that high as 1, 2, 3, 4, 5, and in the bigger picture here, that would give us the A, the B, the 1, 2, 3, 4, 5. There's nothing wrong with that count, but like I said, this wave 2 here, it just doesn't sit comfortably in my soul, but it could be there, Here we can see that we've got a bit more clarity on group 2 here and the importance of it, in terms of just how it sort of squarely sits through. So because it works here, that means it's likely to work over here and become quite valuable as support and resistance. So it does appear that the move down from the top here is in 5 waves. So we could look at this as an A wave, B wave, and C wave to come down here. It'd definitely get to 3 waves at that point, but it still doesn't give us this 38 as the resistance at that point. And that's kind of what we're looking for at this point. We expect the 50% to be hit, and it has been hit. We just need to sort of mull that over, and yeah, we know that we've got a count here. I mean, for this top here, we were looking yesterday also at the SPY, because the SPY and the SPX had a situation where we could have the same count. This is the SPY here, the A wave, the B wave, then 1, 2, and 3 here, and 4 here, and then we could count. We could count 1, 2, and then 1, 2, 3, 4, 5 for the third wave, fourth wave, and a little 5-wave structure. So we've got 5 waves here. So that could have been a top here yesterday, but now we've got this over here. We've got a new high here. So what the hell is that? You know, do we just stick our head in the sand and put this top over here? Well, you know, we could do that, but on what basis would you do that? You know. How does that work? What about that? What is that? You know, so you know, is this some sort of A wave and B wave and C wave? So an A, B, and C here for this. Do we go up from this point? You know, is that what this is about? Or do we come down to the 3,800 here, as I mentioned before, and treat that as 5 waves, as an A, B, C here, and then go up? But it will be this 38 here that you will need, number 8 I'll call it anyway, just cut things short, doesn't really matter how many zeros are on the end. You know, we need something like that. That's the safer trade at that point, finding that as the resistance here. Okay, so yeah, how to treat this up here, that's put a real spanner in the works for the SPY and the SPX at that point. So I need to consider that. Yeah, I just don't think, I can't justify just counting 5 waves here and going, oh shit, it won't matter, it's just a small one over here, or put it over here. That doesn't sort of ring true. It could be true, it could be fine, you know, it could be, that could be it, and the bear market starting with wave 1 here, and you know, wave 2 coming, maybe it pops back up here a little bit further, whatever. And you know, if you're going to go short, then this is little 5 waves here, so you can go short below here. You know, that type of thing, you know, and the stop would just go above here. How far you get is another question with all of that, but that's that. And yeah, so coming back to the S&P here, yesterday we were looking for one more little high, so we've got that in there. So we can have a top in play here. That's the thing. Like I said, what I don't like about it is this wave 2 here. So I think that we could be getting something else going on here with this, you know. So we just need to be a little bit mindful. We don't have to act straight away with anything, you know, and if we do act, well, then we just do it in such a small way, it doesn't really matter, and it's more of an exercise in you know, priming up for the big event, so to speak. Okay, so over to this next one here. That's just the same count at that point, and I want to go to, I'll just check what I got on the 2K here. Nothing on there. Let me go to 1K. Okay, we got something here. Let me just check here. So it's the same same count. Yeah, we're looking for that. It does seem that you know, it's got this sort of, you know, as I mentioned yesterday, to have this top here, this didn't count very nicely down here as 5 waves. There was overlaps with that, and the first wave didn't count very well here. But I wonder if we can put wave 4 over here, for instance, because, you know, how do we deal with this? This is a new high here, so we can't go 1 and 2 here, because this is 1 and 2. This is all the third wave in here, 1, 2, 3, 4, 5 for third, fourth. Oh, 1, 2, 3, 4, 5. I don't think we can do that. I think that this looks like a bit of a B wave here, so we could actually just build up from here. But if we took at you know, and then bring this across over to here, so to speak. But if this does move down here, if this is if this is some sort of wave A here, for example, wave A, and then we get some sort of B wave here, or or wave 2. So we'll put wave C here for this. This can also be wave 2, so we'll put that in. We'll look at. I just want to cover all bases. Really, I know it's probably a bit cheeky, but it's kind of interesting when you cover all the bases. Then you're left with, you know, a certain amount of solutions to handle the problem. So, if this is an A and a B and a C, right, then this low here won't be breached. This low here won't be breached at that point. This will be some sort of wave 1 here, or an A wave, an A, B, C for the B wave here, and then move up. So if this, just moving this out of the way a little bit, when you're doing things like this, it's always good to gravitate over to the closest largest number, and that's 40 in this case here. So we would say that if 40 became the resistance here, then you could trade down short, but you would only get to 38. There will be a strong bounce off that, where it can take you back up at that point. So you're still left with the same sort of problem at this point, yeah. So look, you can do all those sort of things, but at the end of the day, this will be the safe trade here for this. But you could do that one, but you'd have to cope with the bounce off here if you took money off the table here. So anyway, I'm thinking that we've either got an A, B, C for the wave 4, and we're going up for wave 5. And the other one is that we can look at it as an A wave, a B wave, and a C wave down here. So we would come down here and then move off at that point. And the other one, of course, is wave 1 here and 2 here. And then we would have wave 3 coming down here, wave 4, and then wave 5 here. Now, if we got those if we got a nice 5-wave structure here, well, then I would be bearish at that point. That's what we'd be looking for, and there would be some sort of counter trend for that as well, and then down again. So you can see that we've got a little bit of time, because if we got those 5 waves here, then that would be, you know, we'd be on our way at that point. But the other thing too is that if we do get 5 waves down here, then we're going to get a counter trend, and we'll be looking to go short over here for this in the 50-60% retracement area based on those 5 waves, and then we can just turn that box green and go short from there. So that puts us in a safer position, you know, and then we can look to go short over onto this low as well, and we start building in through group 2 based on those 5 waves. Now you can go short under here at the moment and put the stop just above the top here. That would get you through. But anyway, you just got to kind of figure out what you need to do for yourself. But that's the pathway there. Let me just have a look at the 100 ticks. Bring in some more data here. Is that enough? Okay, this is where we were yesterday, wasn't it? So we could look at this differently now. We can put that here. Yeah, so that's 5 waves. You've got 1, 2, 3, 4, 5 down to this point here. So we can go long here at this point. What's sitting? That's the 50 here. So the 50 is really important, but the 40 we could also use here now as well, just in case there's one more little move here. Because that looks like it's a little bit odd here, but 1, 2, 3, 4, 5 here, an A and a B and a C. So it all looks like the 3rd wave here. We're a bit high for the 4th wave, but there could be one more little move here. Just don't get sort of trapped on that. Coming down here somewhere to 3843. This is a CFD platform, and then there'll be a rally here anyway before coming down again at that point. I mean, of course, it can go up at that point. So yeah, that 40 would be the safer bet at that point for that. So let's just see how that plays out. And this can also too be the A wave. If we only get 3 waves here, that will be a B wave then. So then we'd have the C wave back up here and then come down. So yeah, whichever way I think about it, it's the only safe first trade that you can do is having it under the 40 here. Let's clean this mess up. Okay, so that's kind of it in a nutshell. So it just sort of reverts back to that. You can move in short early here. We can have a top in, or we need to, the safe trade will be at the 38 here, but just going back to the 1000 here, I'll just sort of go back over this a little bit. What we're actually looking for to confirm ourselves to be, this market to be bearish, is we need 1, 2, 3, 4, 5 down here for one, and then we'll be on this side over here. So let's just see if we get 3 waves down or we get 5 waves down. That's the thing. Okay, so we want to confirm this before doing anything drastic. Okay, well, let's cruise on. Let's have a look at the NASDAQ. Now, the NASDAQ is a bit of a different fish at the moment because those big tech stocks have been pulling it down. It has recovered. Not all of them are recovered. Google didn't really recover that well. So, a couple of things here. These seem to have a nice sort of double top there. But on the NDX, the cash market, and just I don't have the cash market on this particular platform because I don't trade it, but this triple Q here, you can see that this top has taken out this top here. And on the NDX, like the triple Q here, you can see we've got 1, 2, 3, 4, 5. So we've got an A wave here, and then we've got some sort of B wave in here, some sort of ABC, and then so as an A wave, as an A wave here, and then A, B, C. But the other side to this, of course, too, is that you could also look at this as wave 1 here and wave 2 over here for this. Now, this move down through here, I have to say, I can see, well, for me, it counts better as an ABC pattern. So I've pulled it all apart. You know, you can't go 1, 2, 3 to here, 4 to here, and 5 to here because it just doesn't fit in all of this. So all of that there counts as 5 waves, right? So it leaves it as an ABC pattern. So yes, this can come down further, and we can push this around and push it this way as well. And have that here as the A. That's definitely 5 waves. So you could look at it as an A wave, a B wave, and a C wave for the B wave on that high, and then have 5 waves down here on this. So you could have this as 1 and 2 and 3, 4 and 5 to finish this off here. So this is kind of interesting here. I've got this here as the A wave, the B wave, and the C wave. That's the most logical count for it. The other logical count is to put the wave B over here, and the waves, not that one, but this one here, this wave C over here, and then put the wave A here, and then have this as the A, B, C for the A wave, and A, B, C here for this, and then a move up. And then rolling over at that point. So either of them are fine, and that's what I was thinking for the NASDAQ here, looking at this as an ABC here, and then an A wave here, and then looking at this as a B wave here, because this counts on the NDX as 5 waves up. So an ABC here for the B wave, and then 1, 2, 3, 4, 5 coming back down to the 61.8% here, and then pushing up. So I think that we can come down. We push up, but we could, yeah, so that's it. You know, if I've made a horrible mistake, well, then this would be wave 1 here and wave 2 over here. And if I have made that horrible mistake, then this move down here is 5 waves. Then let's just take a look at that. If we have 5 waves down here, we're either going to go up to here, or we're going to have 3 waves up. So we're going to have an A and a B and a C wave here, and then we're going to come down at that point. If that is the case, we will be looking to go short on the B wave here as an A and a B and a C wave here for that. So yeah, let's just let it sort itself out a little bit. That's where that is. Okay, so for the Russell, yesterday we looked at, let me just get, Just checking this, just checking the IWM, which we'll have a look at in a moment as well. So we're looking at a top here from this B wave here as 1, 2, and we've got this nice 1, 2, 3, 4, 5 for the third wave here, the fourth wave here. And then the trick here is to count 5 waves up here. Now on this particular, on the futures market, we can look at this as 1 and 2. We can't do that on the ETF, the IWM, because this low is lower. So in this case, we're looking at 1 and 2. We have a nice 5 waves up here for 3 and 4. And yesterday I was looking at this as wave 5 coming into here for wave, bringing this wave 5 over here for that for wave 3, and then looking for this to the upside here. But I don't really get a nice 5 wave structure in here. So I'm thinking that first of all, we can have a top in here as well. We can have wave 5 here of wave 5 here, and we can put this as wave C over here for wave C, and then have wave 2 here or wave B at that point, depending how you look at the bigger picture. So we can have a top in here. We do have a bit of a rough 5 wave structure down here. Once again, the other count here would be having wave 3 up here, and looking at this, so it would be looking at 1, 2, 3 across here for 4 and up for 5 for the third, then the ABC pattern here. So that would be pulling back 38.2% or thereabouts. So just put that in here. So that would be here. So that can just come down to this point. Oops, a daisy, don't need that particular tool for the job. But anyway, we can push that back up to there for that, and remove that and just delete that for the time being, and look at this as just down to this point here, which is 1834, and then having another move to the upside. So is that move to the upside sort of valid? Well, you know, for a top to be in place here, if this is the 38.2% retracement level here, and there is really good support over here for this number here, which is the top of group 1 of 1800, 1, 2, and 3 here. So that's group 1. So what we would want to see is we would want to see the market basically be into group 1 here somewhere. You know, we'd need to see it. Would need to see it in here for this. So we would need to see 1, 2, 1, 2. We'd need to see it move down further. So let's just see. Let's just give it a bit of time. If you can see that this next move down here, there will be a bounce off this 30 here. So there, you know, this will if this was going to be bearish, it would be from this top here. It would come down here, bounce off that. It would go back in 3 waves, and then it would come down again. So you'll have that low exposed at that point. If that's the case, then you know that you're bearish at that point. But it definitely needs to lock into, it needs to spend some time into group 1 here for that. So we're in an uptrend. Do we have a top in play? There is space for more to go up, so I'll leave it at that for the time being. And also the Dow Jones here. So with the Dow here, we've been looking at it as wave A and B, and then 1 and 2. Not such a bad wave 2 in this case. It's sort of okay-ish. Looks like a wave 4, and if it looks like a wave 4, it's probably a B wave at this stage, you know. But we do have a nice wave 3 up here. Everything's accounted for as wave 1 and 2, and then 1 and 2 here, and 1 and 2 and here, 3, 4, 5 for the third, then the fourth and the fifth for the third. So second, third, fourth, and fifth, we've got 5 waves moving up here for that. This situation here, I suppose we could bring that across to here and then push this across to here, but I'd still need to look at this as a wave 3 here. So I'm thinking we've got an ABC for wave 4. This also doesn't count very nicely as 5 waves up here, so as an A wave, a B wave, and a C wave here for that. I'll just remove these. I was thinking about going short here, but let's just get a little bit more evidence in here first. So if this is sitting over here, for example, then this could be 1 and 2 and continuing to move up at that point. Now the thing here is that I know we could look at this as a top. We could put that in here, or we could look at this as a top. That's the bottom line at this point. Now the thing is because we're in an uptrend, we have to respect the uptrend, and we don't have a lot of evidence for a turn to the downside just yet. If this was, they were in a series of wave fours here, and 38.2% would be here as well. So if this number here became the resistance, then we can be looking, we can work out some short trades at that point. So trading against the trend at this point in time, it's doable. If you did do it, make sure your positions are very, very small so you don't have to worry about them too much. And yeah, but I think there's more upside to come for this, you know. I mean, if this is a nice wave 3 here, for example, we haven't really seen a wave 4 for this, you know. I know we could look at this as an A wave here, a B wave here, and a C wave, you know, up here for this, and leave it at that. But I'm not that happy with that either, because the relationship between wave A and wave C doesn't really line up very well. You know, the proportions aren't there for it. I could get a proportion for it. I could, you know, look at this as 1618 rather than having equality of 1, so to speak. So, I mean, it's doable, but I need a lot more evidence for a turn in the markets at this particular point in time. Okay, so I'll leave it all at that. Sorry for such a long video and me waffling on about all of this, but the more I talk about it myself, I've you know, because I have to work out, I've pretty much work out all this stuff on the hop. So it's one task and on to the next task. So it helps me talk about it. And I know you're listening, you just can't say anything at this point. But yeah, we will have a nice little chat module on our new website. And we're going to try and migrate folks, all your accounts, over to the new website through November. So somewhere in early December we can sort of migrate over there. There's not going to be a lot of big difference at this stage. I mean, one of the things is that the stock charts and the crypto charts will have better functionality to find certain stocks quicker. There'll be a chat module up there so you can communicate with each other and me and all those sorts of things, and put charts up and videos up of yourself, of you know, of whatever you wanted to discuss, and communicate a bit better there. There are some very basic stock and crypto portfolios on there. You can only go long on those portfolios, so you'll have your own that you can muck around with. We'll do some work on those. We're getting the old CFD Profit Keeper portfolio that I had that never really worked properly. We're going to redesign all of that. It will end up going on the new website, but it'll only be there for a little while until we want to use it there for a little while, and then get it all redesigned, and then put it back up there. But on that particular portfolio, that will end up not just having CFDs on there, it will have stocks on there, US stocks, and crypto, and stock CFDs as well. And we'll be putting trades on there. So the trades will be more short-term trades for stocks, you know, trend trading and a few different strategies that we normally use. So we'll start putting up trades in those portfolios. They'll have entries and stops and those sort of things. And then you can push those trades through to a calculator to work out your position sizing, and then load them all up to market, and then put them through into the portfolio, and then look at your own results and our results, and you know, so some functionality on that side of it. So you won't be able to push them through to a brokeraging service just yet. That's something that we could probably look at in the future. It's not a big deal. So yeah, so anyway, that's sort of where we're at with that. But that stock portfolio, CFD portfolio, when it's probably be mid next year, the time it's actually finished. But we'll use it in the short term just we're just looking for ideas to redesign it basically, and then rewrite it in a better language that functions better, because it's a bit clunky at this stage. But anyway, alrighty, thanks for tuning in. Cheers.